Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me are Surbhi Upadhyay and Pavitra Parekh. And girls, it's another quiet, range-bound morning so far. It's Tuesday and the Nifty is up 56 points, 17,900 exactly at 11 a.m. The Sensex has gained 200 points. The good part is the Nifty is at least holding above the 20-day moving average, which stands at 17,838. The Asian markets are mixed. Hang Seng has a bit of a cut going for itself. That's down nearly 1%. And the Dow futures is suggesting a negative start. Remember, US markets were shut yesterday, but right now the Dow futures is down more than 100 points. The mid-caps also are holding up in the green, a gain of close to about a third of a percentage point, and the advanced decline ratio is marginally in favor of the gaining side. We've got about 1,500 stocks in the green for about 1,200 stocks in the red. This week is low in terms of cues, but if you have to pick up things that could move the markets, one, globally, the Fed minutes tomorrow, and for our own markets, the expiry on Thursday. One of the individual stocks that I'm watching today is Wipro, and Wipro is among the top 5 Nifty losers. So Wipro is currently down more than 0.5%. You know what reports are saying, and this is across, the company has lowered the fresher salary. So earlier, some of the freshers were promised 6.5 lakhs per annum, and now they're saying onboard us, join us at 3.5 lakhs. We're looking at a substantial near 50% cut, and this is just perhaps an indication of the slowing environment and the fact that attrition has been coming down for the industry, and therefore perhaps they don't need to hire talent at higher costs. And that's a statement that's coming from Wipro, which has been picked up by all reports.
How things change, right, Reema? I mean, a year back, we were all talking about this war for talent and so on and so forth. And now that's a massive cut. I wouldn't be happy if I were a fresher in the IT sector, whether I'd applied for Wipro or for any other company, looking at these kind of reductions.
And actually, the report also went on to say that these freshers were promised that join us in August. It got delayed, and now they're saying join us in February, March, but at a lower package. So one, there's been a delay, and two, they are asking them to join at a lower.
That's a great indicator and one worth sort of keeping in mind. Let's see.
But it's not necessarily on demand, right? It's also an indication of the supply side and the fact that attrition is coming down, and therefore you don't have to hire at any price.
Well, let's see how this plays out. IT is definitely in focus. I'm actually looking at slightly more positive things today. So let's talk about what's taking the market higher. Banks. And remember, banks were the problem yesterday. It was really that downward onslaught on the bank Nifty that led the market to a very sort of listless sort of a close. Today, that bank Nifty position has completely changed. When the market opened till about 10 o'clock, it looked like it's going to be a repeat of yesterday. But then things have picked up and substantially. The bank Nifty is up 1% from the opening lows. And right now, it's trending close to the highs of the session. Lots of contributors. Pull up the intraday charts of ICICI Bank, SBI, HDFC Bank. They'll mirror that bank Nifty move that we've seen. So starting negative, but now there's some traction picking up. Question is if it's going to last. The 20 DMA, the daily moving average, that's going to be the next sort of level to look at. That's coming in closer to 41,300 odds. So we are inching towards that mark. Let's see if it sustains or not. But right now, the large cap banks are holding okay. The other sector is really metals. And a lot of the frontline names like JSW, Tata Steel, SAIL, there's a bit of green on these metal stocks as well. Some anticipation of price hikes, which we are seeing in the international markets, perhaps also now taking shape in India. So the metals part of the market is also not too bad. Pavitra, I know you're looking at some metal stocks even beyond the index, right? There's some gainers out there.
Oh, absolutely. The metal stocks are doing very well today. So take a look at even something like, Ratnamani Metals and MDC Steel, which listed yesterday. All of these are doing quite well. So there's definitely strength seeing across the pack over there. You were mentioning the large cap banks. The PSU Bank Index is one of the largest losers still, right? So some of the smaller names, the bank, like Bank of India, Bank of Baroda, seeing some cuts. You have Canara Bank, which is seeing some cuts. So some of the smaller banks not doing so well. There's been a new directive from the Power Ministry, which is why you're seeing a lot of these power stocks pop. So take a look at, say, Tata Power, you have IEX, Adani Power. All of the other Adani stocks are in the red, but this one is up almost 5%. So do keep that on your radar. Along with the PSU Bank Index, which is in the red, you also have the real estate stocks, which are seeing some cuts. Anyway, this has not, been a very great past couple of weeks for the real estate stocks. But again, cuts coming through in a few of these. I've just put up a few, but, a lot from the sector are under pressure. By the way, we are also getting some visuals which are coming through. I'll come back to the markets in just a bit. And so those are the visuals from the launch of UPI's integration with Singapore's digital payment services provider PayNow. The Unified Payments Interface of India and PayNow of Singapore will now be linked for faster and cost-efficient cross-border payments. So that's important. We also do have the Prime Minister who will perhaps speak on this shortly. But those are the visuals coming through. We'll keep bringing you updates on this as we do get them as well. For now, let's also get a conversation going now. ICICI Securities has come up with a note on mid caps and small caps, and they're saying that mid and small caps have low margin of safety on current profits, but the end of the quantitative tightening cycle and profit trajectory ahead lend support. We are now joined by Vinod Karki, who's the author of this report, and he's the head of strategic research at ICICI Securities, to take some questions.